Hey traders, welcome to Charts and Coffee. Great to see everybody. Happy Tuesday, everyone. Shout out to our Simpler Essentials room and all the folks tuning in on Simpler YouTube, Raghee Horner YouTube, as well as Twitter, X, whatever the heck it is now. Great to see you all. As always, get those questions in early, first come, first serve. We will take a look at what's going on in this market. Few things to kick off. We continue to buy calls on dips. I know. News flash here to those of you like Charts and Coffee. We are continuing to take advantage of the overall uptrend. We are going into end of month, so there's a bit more of that window dressing that I spoke of as we go into Good Friday. Of course, and I actually did not know, even futures are closed on Good Friday when we're getting the PCE data, when we're getting Powell speaking. So tomorrow is the second to last day before the end of the quarter. So if there are names that, say, a fund manager or somebody wants to put in the books, now's the time to do it. End of quarter is not time for bottom picking. Let's keep with the trends as we have been, and onward and upward, gang. Let's just see what we've got. As we take a peek at what's going on in the broader averages, a lot of volatility. Remember that the futures contracts have been trading all night long. There's a 1 hour break that the futures contracts get. And I mean, NASDAQ, S&P, Dow, Russell. There's that 1 hour little nap that they like to take, and then they get right to moving. There's a good amount of liquidity in the S&P, NASDAQ, and the Dow, even pre-market, Russell too, even pre-market, especially once we get past 7 a.m., which is kind of a loose, early, first cup of coffee type open for the U.S. trading session. And we can see that since then, been a little bit of a pullback of the rally that happened, quote unquote, overnight. But remember, when we are increasingly talking about 24-hour markets, when we are increasingly thinking about the impact indices and bonds and gold and crude and currencies have on the broader market, the stocks specifically, remember, a lot of that sentiment's already rolling from the Asian session, the open of the European session, the open of the UK session, and the close of the Asian session. So there's a lot of things already happening. So overnight sort of makes it sound as if no one's paying attention. That's not true. The US is sleeping, but a lot of folks are moving and grooving. As my F1 fans will know from this past weekend, the race was at midnight, right? It's a great big world out there. And whether we know it or not, we're trading all of it, which is really pretty darn cool. All right, so as we kick off the morning, are we trading above the previous session close in the broader averages? Yes, on the ES. Let's jump on over to the NASDAQ. There we go. Clearly, the coffee has not kicked in. All right, yes, on the NQ. I know, go figure. Continuation? Raghee, say it isn't so. Dow. Yep. Now, not all trends right now are equal. Some have a little bit more swagger than others. If you are a reader of the Top Tier Outlook, if you're a member of the Sector Secrets Mastery, you know that to understand why certain indices are in many ways outperforming others has a lot to do with, once you lift the hood, what are the stocks, what are the sectors that are weighted within them, and how are they performing? Right? So it's not just the S&P, it's what are financials, tech, healthcare, energy doing. And the same thing applies to Dow. We're really looking at the same handful of sectors for the NASDAQ, the Dow, and the S&P, but with different amounts of weighting, right? We're really looking at very similar stocks, but again, with different emphasis within the weighting of each index, right? So know the weighting, you'll understand the impact, and that's why we continue to remain bullish. Heck, even the RTY has been moving and grooving a bit, despite what has been still a lot of chop in the regional banks, which makes regional banks sort of the most vulnerable of the. Where is my bottle of water? Anyway, makes regional banks a little bit more vulnerable to the Russell, which makes the Russell much more vulnerable to that very important lagging sector. All right, at least I have my salted water. All right, bear with me here. All right, so that is what we're dealing with as we start off the morning. As always, if you have any questions, good morning, everybody. All right, so let's see. What else do we have? So options expiration is the 28th, which is Thursday. Thursday, the markets are indeed open. Friday is the 29th. That's Good Friday. And the markets are closed, including futures, which sometimes we have a half-day session. Just an unusual day. On bank holidays, sometimes there's a half-day session for the futures. Nothing like that this Friday. What is unusual about it is that on a holiday, we are talking about Powell and PCE, but we'll deal with it. All right. So again, 28th is Thursday. Markets are closed on Friday, the 29th. XBI. All right. Standard. XBI. So if I'm looking at XBI, what I'm looking at here is essentially, let's think about the biotech and, whether or not it's high concentration weighted, what's weighted heavily within it. I don't play biotech all that often. So it's not something that is usually one that I keep a really tight pulse on, nor, frankly, do I have any skin in the game in biotech as a general rule. And this one's especially difficult because pretty much your top 15 to 20 names, the last I checked, my friend, are all 1% weighted. You're going to see a constant shuffle of those top heavily weighted names. So in a case like this, can we trade something like this? I personally won't, because I prefer high concentration weighted sectors. However, we have a beautiful Darvis. We have an oversold support level here on the secret squiggle. We have a neutral market with a trend that preceded. Again, just not knowing about the stocks within this, because they're always changing. Again, 1% weighting is the average of the top 15 or 20 stocks. But that being said, look at this gorgeous automated Darvis, and that would be a reasonable level to look at a long position. And I would be long. I would be bullish if I were playing this. All right. So I would focus on that. All right. So moving on. What stocks am I currently interested in? JP, this is going to seem like a very vague answer, but this is really what it is. Relative outperformers. So the best way to look at, okay, Rog, where are you looking? Where is it that you have the most interest? And a quick heads up, gang, we will have just come out of the 8:30 durable goods hot zone, and we're moving into a 10 a.m. consumer confidence number, which could add some volatility this morning. But to answer the question about what am I looking at, sure. So I'm going to jump on over to Koyfin. Where's my Koyfin? Bear with me here. I'm going to jump over to Koyfin. And Koyfin is where, and this is a free site. This is where I look at the sector weightings. A lot of folks ask, Rog, what is this site? Koyfin. And take a peek. What am I interested in? Start at the top of the food chain. What are the top two sectors right now? I like the S&P the most, probably followed by the Dow. Having said that, if I'm going to play tech, I'm going to play tech that's leading within the semiconductors and with communications. So see how specific we're getting? We're not playing the popular names. I'm not looking at Apple. I'm not looking at Microsoft. Those are not names that are weighted heavily in XLC or SMH. They're not weighted at all, really. So XLK is not performing in the same way. So realize that understanding the sectors are going to drive me to certain stocks. And then when I'm able to look at the stocks from the perspective of, well, let's pick apart SMH, for example. SMH is, for the most part, best played by looking at SMH itself, if you're looking at scalable liquidity, or NVIDIA, if you have a slightly larger account and can deal with a darn near $1,000 stock. SMH is going to take advantage of NVIDIA at a bargain. So it's really one of those overlooked ways of playing NVIDIA. And remember, if you look at your analysis and your output is, oh, SMH is going to continue higher, or Nvidia is going to continue higher, buy SMH. You'll be able to buy more of them and get better bang for your buck. So that's the process. That's the process. All right. And that's how I figure out what it is I want to focus on week after week, or even from a day trading perspective, day after day. All right. Next up is we take a look at Costco for a swing. Costco is not the leading stock in that corner of the world. And while I may not be focused on it, we've been looking at Walmart a little bit more. Costco, there we go. Costco is most definitely eligible for buys from two spots. Always know your zones and then wait. I know that's tough. Waiting is a very difficult thing. But that's what a trading plan is, right? Where is my edge? And what is edge? What's a really good way to identify edge? Edge for me is two spots. Edge is having a predetermined level at which I want to begin scaling into a position, and the point at which I can have the best that I can find risk management. That's edge. And when I can find that in a relative outperformer, so that's where Costco would fall a little bit further down that list. If I can find a stock that's a relative performer and in the zone with reasonable risk management, boom, that's it. But for Costco, the only place that it's falling short is, frankly, the relative outperformance. But the daily price movement range is one you can look at, as would the Darvis. But I would not recommend Costco over some of the other names for within this group. Actually, let's take a look at the group together, because maybe that'll put it into a little bit more focus as well. Number 2 weighted stock in XLP. XLP is moving higher, right? Procter & Gamble's moving higher. Walmart's moving higher. Take a look at Altria, Colgate. Take a look at Monster. That's what I mean by relative performance. All right. Next question is Abbott. Eddie, let's do the same thing. Let's crack open the XLV. Is ABT heavily weighted? ABT is in the list. Don't get me wrong. However, if we're thinking about heavily weighted names in terms of ABT, what I want to remember is Abbott. Yes, it's in a number of places. It is an XLV, but it's about 3.5% of the XLV. Now, let me juxtapose that with Lilly at 11.5%, or United Health at 8.5%, or Johnson & Johnson at about 7%. And right now, what you've got is Lilly sitting atop the weighting. Then you've got UNH. Then you've got Johnson & Johnson. Abbott is down here below Thermo. And, if I'm looking at healthcare, 2 reasons I'm going to pass on healthcare. One, we already have exposure in what was an uptrend in this sector, and that was AbbVie. So, Eddie, I'm bullish a single stock. In fact, we have an open position, and that's ABBV. Abbott doesn't have an uptrend. And if I'm looking at this sector with fresh eyes and remembering that we're going into the end of the quarter, is there going to be a lot of appeal? There haven't been consistent flows in XLV as a general rule throughout the last month, despite the fact that at the early part of the year, there was some nice sector rotation. But right now, my focus really wouldn't be here or on ABT. We're going to play Abbott out, but we're putting a pretty tight leash on this winner. And we're going to start to reel this in, because my concern is, as I wind down the quarter, XLV is not going to get a lot of love. All right, next up is Matt. All right, Matt says, hang on, let me go back to the top tier. We know that RTY doesn't lead. I don't know, Matt. There's still a lot of people running around with their heads on fire saying that it does, but good luck to them. But yes, anyone who understands the basics of the market, anyone who understands market weighting 101 and how correlations work, yes, I agree. RTY does not, in fact, lead. That still makes me laugh. Thanks, Matt, for the laugh this morning. But due to its equal weighting, smaller cap, does it generally respond to risk appetite differently? Yes. The best way to look at RTY, the Russell, and this could be the IWM ETF as well, is to look at KRE. It's going to be the most influential. There's a lot of stocks in RTY that are usually very popular trading stocks, and that list can shuffle up pretty frequently. Does it respond to risk appetite differently? I mean, look, if we get a rising tide lifts all boats, if we get a lot of risk appetite, clear risk appetite as we go into the bullish election cycle, a dovish pivot, which is also a bullish cycle, this should benefit, but you got to keep an eye on KRE. So the difference between it and the Dow, Nas, and the S&P, let's compare it to the Dow and S&P and not the Nas. If we were talking about the Russell 1000, not the Russell 2000, which is what the RTY is, Russell 1000 behaves a lot like the NASDAQ. Russell 2000 is going to be a little bit more financials oriented. So when I look at how big banks are benefiting the S&P and the Dow and how regional banks are sort of holding the RTY back, this is a little bit of trade this, not that, right? A game we like to play in the Sector Secrets Master. You all remember those books. Eat this, not that. Trade this, not that is going to keep me focused on big banks. And trade, which is something we've been doing for a while, and trade this, not that's going to keep me focused on the S&P and the Dow over the Russell. All right. And it's little things like that that prevent traders from getting into things that just may not be moving in the same way or in a predictable manner. Things could have an up day, right? But we're not home run hitters. What we're trying to do is every day, every week, every month, just get on base, right? This is Moneyball. This is Brad Pitt snapping his fingers and pointing at Jonah Hill and saying what? He gets on base. That's what we want. Now, look, if you want to hit home runs, good luck. That's not a way you I was actually, it's really interesting. I was watching Dumb Money last night. Sat down and finally watched it. A lot of the members said, Rob, you got to check out Dumb Money. So I did. And it was a very interesting look at two things. One, there's an entire community of traders that are dedicated to this style of home run hitting. Find that stock, go all in. And if you all know how the GameStop saga ended, didn't end well for everybody, because playing that hot stock, making those kinds of moves is not something that, you're going to continue. I mean, where's GameStop now, right? What is the next GameStop? I don't know. I look at SMC, I like GameStop, right? If your career is built on finding those stocks, that's called needle in a haystack trading. And granted, you might be able to do that, but it's low probability and it's very, very difficult. The other thing that I remember watching Dumb Money is what a disservice the Big Short has done to the trading community, because all of a sudden traders think that's what they're supposed to do. Traders are all of a sudden thinking, rather than following a trend, which is not what the Big Short was all about. Love the book. Movie was great, entertaining as heck, and literally toxic to the trading community, because now people think it's their job to find the top in an uptrend. By the way, as the 08 bubble, right, it lasted a good 16, 18 months. While that 08 bubble, and I was part of that, a lot of you were trading back then, so was I. Yeah, eventually the floor fell out from underneath it. But on the way up, there was a lot of money to be made from the upside. I wish they would at least write the other side of the book, which was, how about trading the bubble for what it is? And so whether or not you believe the current uptrend is legit or not, believe me, when the profits hit your accounts, they don't deduct a percentage by saying, well, this isn't real, right? We should really be lower. So I know that's not at all the question, but please remember what's happening in the community has changed a lot since the Big Short and what traders think they're supposed to do. How many folks have been picking tops along this uptrend, waiting for the Big Short? And that is sadly the disease that has infected traders. And it's really one that I'm actually shocked at this point hasn't been shaken. Yeah, it's really awful in that regard. Great book, great telling of a particular part in history. And the takeaway for far too many traders is, well, let's go pick tops again and have our $2 billion trade. Yeah. So that being said, let's follow some trends. Check out Dumb Money. It was actually kind of a fun movie. All right. YM. Let's take a look at YM here real quick. Speaking of big banks, this is where big banks land the largest. So if we're talking about juxtaposing RTY to Dow, I know, crazy, juxtaposing small caps to large caps. The difference is not financials, because they're both number one weighted in each one. What kind of financials? Regional banks and RTY, big banks in the Dow, and big banks are moving. All right, next up is BX. What's BX? I have no. Okay, Blackstone. I have been playing BX. BX looks like bouncing off major high. Okay, let's take a look at it. I don't know anything about BX. I've got no exposure. Clearly, it's not a trend. So, of all the things I could do, do I see enough upward? Not a clue, my friend. This is not a kind of stock that I would recommend. Gosh, do you see what BX is doing? Back and forth, back and forth, back and forth. If you have a choppy strategy, if you don't have a choppy strategy, come on over to Sector Secrets Mastery. I'll teach you how to deal with something like BX if you want to. But more importantly, I'll teach you how to find stocks like Visa. I'll teach you how to take advantage of moves in JP Morgan, because look at that. I mean, isn't that where we really want to be, right? In just a buy the dip and a stair step higher. So I have no idea. I can't give you an answer. Is it going to break higher? Don't know. At the moment, it's not a matter of if it will break higher. Position yourself in such a way that if and when that happens, right? If and when that happens, you could take advantage of that, right? Okay, next up, do I have any thoughts on the higher than expected durable goods order, or am I in the wrong? But no, not at all. So remember, I don't really care what the numbers are. I'm much more interested in the reaction that they trigger in gold, bonds, crude, indices, currencies, right? So no, I have no opinion on the number. All I want to know is at 8:30, what was the response? And at that point, I can say, all right, there's something for me here to use, right? The volatility is all it is the volatility that hot zone triggers. And you'll see here at 8:30, 8:35, 8:40, we can largely say core durable goods sent equities lower from that time forward, right? So not the wrong ball field. It's just that I'm not trading durable goods. I really don't care what the number is. I care what the reaction is. So I hope that makes sense. All right. Any thoughts on GENI? Trade what we see? No, it's below the 200. Against a stock like this is simply not going to be one that I would look at for consistent follow through. Remember, again, we don't want just a breakout. We don't just want a trade. We want 6 trades. So those of you in the mastery know we've been in and out of American Express 4 times. We've been out of GE multiple times. We've been in and out of JP Morgan multiple times. So I want to find things that are going to continue to climb higher. So it's not about, can I get a breakout out of something? It's really about the consistency and the continuation after. Continuation is where a trade is a 2, 3, 5x. We're in BITO right now, for example, in the mastery. This is what we're looking for. We're looking for, can I buy an option on a dip and get a 2 or 3x out of it if we can manage the risk? And that's exactly what we have in BITO. So this is probably a 4x trade at this point. It's definitely 3. So GENI simply doesn't have the structure for me for that. And it's below the 200, so it just isn't going to be on the list. Now, look at other stocks, maybe, Joseph, that are trading in the same pond, if you will. Oh my gosh, it's 924 as GENI. And then maybe you'll find an opportunity. JT, important question. I know I've run way over. Oh my gosh. Yes, I absolutely use the V score and I absolutely use volume. It's just, I have 9 screens and they're going to be on other screens. But yes, volume is one of the four factors, right? Price, time. A lot of folks use those two, but volume and volatility. So absolutely. There is never going to be an indicator that I introduce that I'm not going to consistently use, because to get on my charts requires usually at least a year, if not years of testing. So once it's earned a place on my charts, I don't ditch them. So yes, it absolutely is. Sorry for running over today, gang. Thanks as always for being here. I'll see you tomorrow. Same time, same station.